Good morning and welcome to your week starter edition of AM Express, exclusively brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. It's been an interesting weekend heralding a new week, and we've got insightful headlines making their way through the pages of Business AM this morning. And of course, joining me for conversations is Mr. Frank Isakba. He's the publisher at Business AM. Good morning, Mr. Frank.
Good morning.
Thank you for joining us once again. Good to have you. Of course, we woke up to the suspension of the strike by the NLC and TUC, of course, after they had met with the federal government. What are some of the things that you've heard that you can share on the suspension of the strike?
Okay, the key element from what we've heard is what came out, the government conceding with regards to electricity tariff increase. We understand, that government is going to look at that. But that side is that petroleum pump price won't be touched by the government. And again, you can understand that from government's earlier position, in its attempt to try to deregulate the petroleum services and downstream industry.
Right.
But the key thing is that this strike may have long been coming, perhaps the NLC hadn't jumped into it the way that a lot of people expected it to do when these prices or these price increases were announced. But by and large, you will see an economy that needs to be boosted in terms of all hands being on deck. Whether strike is actually what you want at this time is what analysts question,
Right.
Because the economy is in trouble. We know it's been in trouble for some time. The global economy has also been in trouble by COVID-19, But I think major concern is that because there has been a lot of suffering by the people, by citizens, they expected government to show some kind of sympathy in terms of how it addressed these key areas of electricity price, tariff, and the pump price of petroleum. Perhaps what we are hearing is that government ought to have done it better, approached it better. But again, you have some people who are saying that, what could be a better way? There's no better time, especially with regards to petroleum pump price, which many have called for deregulation in terms of downstream part of the industry for a very, very long time. But the key thing is that many people want to see sincerity on the part of government in terms of how it approaches policy and in terms of how it addresses some of these key issues that impact the economy strongly. So we're looking forward to what comes out later on from this initial suspension of the strike,
right,
and to see what government will do with regards to the tariff, and whether government will actually come up with clear-cut policies where it will eventually begin to see itself, backing out of these specific areas of the economy.
All right, now looking at the front page of Business AM this morning, topping the front page is the report, Cross River seeks to harness Gulf of Guinea's economic potentials. Now, this report brings attention to the move by Governor Ben Ayade of Cross River State, facilitating the establishment of a new commission to boost trade between Cross River State and the 13 countries that make up the Gulf of Guinea, talking about maximizing the advantages of most of Gulf of Guinea's country. Now, the question is, why is this a big deal for Cross River State now?
It's a really big deal. Cross River State used to have some oil blocks. Cross River State used to have Bakassi that produced oil, no longer does. And when I think some years ago, some of its oil blocks, were taken over and given to some other states, I don't know, Bayelsa or River State. But the key thing is that it is interesting that a state in that location is looking around itself to see what opportunities exist,
Right.
We are talking about a region where in 2005, the top report from the World Bank said had 300 million consumers, with a GDP of $112 billion. Its export is put at, the export of the area is put at $45 billion, and imports at $31 billion. Now, what you can see from all of that is that if you look at the numbers and you look at a state like Cross River being close to the Gulf of Guinea with 13 small countries, and you also put that into perspective with regards to the African Free Trade Zone that is about to take off. It is a good thing that the governors begin to look at other areas of generating revenue, because the key thing is to tap into the economic opportunities that you have around you. If you cannot play too well within the Nigerian state, you should look out because of your closeness or your proximity to these countries. The key thing is trade. Nigerian states around the borders, do trade with some of the neighboring countries. Now, if you try to formalize that, if a state tries to formalize that, then it could have the benefit of having revenues come directly to the state, and then to take advantage of what it's available in the area. The state is working on the Calabar free trade zone. One thing the report highlights is that those states, the countries that make up the Gulf of Guinea, actually import, and they import things that are produced, maybe some produced in Nigeria, or from outside of maybe something outside of Africa, and here we have Cross River close to the state, that if it puts its act in order, can take advantage and can begin to see trade relations begin to exist, and then broaden the trade relations in such a way that it can help itself to grow. We're looking at the Gulf of Guinea with a trade value of in excess of 1 trillion, possibility of $1 trillion. Can you imagine if the state can have a bite of that? Even Nigeria can have a bite of that if it puts itself in order to take advantage.
Oh, that's a lot. That's interesting. Now, just below that particular headline, still on the front page of Business AM, that one there, rip off Nigeria. Telco's bonus offers to subscribers less than time data promised. Underneath that, consumers pay more, get less service value. Network providers charge consumers 7.5% VAT. Now, time and again, we've seen headlines and complaints where telecom subscribers express their frustrations at the practice of seeing that their data bundles, their airtime, no longer last that longer like they did in the past. And that's not different from the survey carried out by Business AM in this report. The question now is, what is the stance of the regulatory bodies? Talking about the Ministry of Communication and Digital Economy, because these are complaints that we keep hearing time and again.
This is what the story is trying to do, to draw attention. Yeah. We noticed, especially because working, during this lockdown and having to use a lot of, use a lot of data, to either produce the paper or communicate to source for information. We noticed that it's not so much about the core data that you buy. We're looking at the bonuses that are the buy one, get one offers that are made to customers, that are used to lure customers to buy data or buy airtime. Now, you notice that the data that is often given, or the additional airtime that is said, buy one, you get one free. That is, you buy 10 minutes, you get another 10 minutes, or 1 hour, you get another 1 hour, or whatever it's calculated. You notice that the bonuses that are offered across the networks, do not last at all. So we decided to carry out a survey. Are we alone in feeling this deception? Because the reactions to this story has been coming from far and wide. Somebody from the US told us that this is indeed a ripoff or what you call deception. And but we are trying to draw the attention of the authorities to say, is anybody checking this? Why isn't anybody checking this? Why should they make an offer and then in deception, whether deliberately or not? Have they done this deliberately? And that's what the ministry and the NCC should be looking at. Are they doing this deliberately to deceive consumers? Now, like we said, the media is a platform, for such things to be brought to public notice, or for the regulators to take notice and act on it. Right. Although the NCC has over time done some work in terms of their consumer, I think they hold this meeting whether quarterly or so, where they look at all complaints from consumers. They did do this some time ago, and the Minister of of communication, and did say he was going to investigate, or directed NCC to investigate some time ago. I think it was last year. 1 year later, nothing has happened and nothing has been heard. So it was about time we thought that this be brought again to the front burner of discussion by NCC and the ministry.
All right, now for more information on that survey and of course the numbers, it is on the cover page of a Business AM and continues on page 2. Still on page 2, you would find the September PMI numbers. Of course, we saw a slide in those numbers there of 46.9 points, and that's another contraction there for a fifth time in a row. And now over to page 10. Of course, we see the rate cut to support growth in economy. This story talks about the fallout of last week's MPC meeting. What are some of the key elements you want readers to take away from this one?
Now, we went around the investment houses, a lot of the research houses, and we narrowed down to FSDH report on their take on what the outcome of the MPC meeting is all about. Now, the key thing is that inflation, inflation remains a key element. MPR was reduced, by 100 basis points. Now, that the CBN and the MPC said is to drive growth in the economy, to ensure that the economy, again, one point is for banks to ease the stress on banks so that they can lend, but there's a lot to be said about inflation. Inflation continues to pose a threat, and then they said that a lot, it depends on that in particular, but also the forex challenges. Nigeria has been facing a lot of challenges around forex management in terms of forex liquidity in the country. You saw how the naira was under severe threat. Even before the CBN decided that bureau de change should be allocated some money, so that, and that did bring down, did moderate it, but hasn't solved any problem. And then you also have the aspect that inflation there could be some maybe deep recession in the fourth quarter. If it's important that the monetary and the fiscal authorities should try as much as possible to rein inflation in. And so high inflation, they say they're expecting high inflation in the fourth quarter, possibility of deep recession in the first quarter, contraction in real aggregate demand, and that you could have seen from what the report from the PMI report that you mentioned earlier,
right.
Which has to do with manufacturing, what's going on in the manufacturing sector. You have again, threats from lower inflows in terms of foreign investments in the fourth quarter to something to watch out for. You have declining external reserves that's been going down for some time, and it seems to be affecting again liquidity in terms of foreign exchange. You have high distortions between MPR, and again that's very important. This high distortions between the MPR and then other rates in the economy. Although the MPR has been reduced, it poses a threat to the regular interest rates that we have, because you're likely to see interest rates on savings go down, and then and it could turn negative eventually,
right.
And so you have lower crude oil prices and output, that's a threat for the fourth quarter. And public sector debt remains a threat as well. These are the things to look out for. Exchange rate movement, and then balance of payment challenges. These are the things to look out for going into the fourth quarter.
Right.
And analysts are saying that although it appears as if the decision by the MPR and the MPC sounded positive, but there are still threats ahead.
All right, now, Mr. Mr. Frank, I'll let our readers check out the finance and investment section of the paper for more details. Of course, still there we have Naira holds ground across AFEX markets as CBN comes in with liquidity. Of course, we saw market participants maintaining beats around 383 Naira and 390.34 Naira to the dollar. Both these headlines you can find on page 11 of Business AM. Now, before I let you go, Mr. Philip, this week, Nigeria will be 60. It's a diamond celebration, which the federal government has said will be low-keyed but staggered, lasting an entire year. Did you have any conversations with any analyst about the coming celebration?
Yes, most of the analysts are saying that it's a huge what you call junction in the life of Nigeria. At 60, celebrating your diamond jubilee, that they're saying they looked at the economy and they're saying Nigeria should be bigger. The economy should be bigger than it is at the moment. That the economy is still small. For the size of the country, that spending is still small. There's one popular economist, and again joined by which the view he has shared, which the economist I'm talking about, Tope Fashua, who continues to push that our spending, it's quite below the size of the country, that we should be expansionary in our spending, and that view has also been shared by Mustafa Chike-Obi, lately, and the thing is, the key point that they are making is that at 60, the size of the budget, not much to write home about, given the size of the country and given where Nigeria ought to be,
right.
And the key thing they are saying is that as we celebrate, we should reflect on the economy, and be more proactive and more organized in terms of how we deal with issues relating to the economy.
All right, Mr. Philip, thank you so much. We'll have to draw the curtain here. We'll get back to you on Friday to catch up on developing stories.
Thank you very much for having me.
All right, Philip Isapa is the publisher, Business AM, Nigeria's fastest growing financial and business newspaper. Don't forget to join us on Friday again. It's AM Express on Africa Business Radio.